Good morning, Soren.
Excellent to see you, gents, again, and we're starting to see some people coming in now as well. We'll just wait a couple of moments while everyone logs in. Some familiar faces as well. Thank you for joining us again for this session today. So while we're waiting for everyone to come in, today's session is really a market update, insights you need as a commercial property landlord in today's market. We did the first of this, I think it was back in March, wasn't it, Steve? Just as we
Yes,
were
that's
all,
right.
yeah, coming out of lockdowns. This is the market update that we're doing since then. There's been a few changes. It's been nice to have the freedoms as well. So we look forward to talking you guys through what we've been seeing out there as well. So look, let's make a start, guys. We've got a few people that have come in now. So thank you, Matt and Steve, for taking some time to talk to us today. I know it's a busy time for you guys at the moment, so really appreciate you guys taking the time to talk us through this today. So we're probably looking at about 15 minutes for this webinar in terms of that update as well. But before we get started into that journey, one of the things I just wanted to really encourage, because we are on a journey here. I think this is our 6th or 7th webinar that we've done, and hopefully everyone's receiving the emails and enjoying the blogs and bits and pieces that we're creating. But certainly if you have any suggestions or anything that you'd like for us to talk about, certainly send it through on the chat in this webinar today, or email us at digital@tsimos.com.au. So we do review that and look at those things and plan topics and bits and pieces. So,
definitely here to see what people come up with and suggest and what they want to hear about. We're excited to produce new content to people.
Absolutely,
Yeah.
absolutely. So thank you, boys. So look, gents, let's get into a bit of a general overview. I mean, so the commercial property market, we know there's different asset classes and bits and pieces, but when we were last catching up, I think we were all sort of just coming out of that lockdown period. So that was things like, rent deferrals or waivers and bits and pieces as well. How are we tracking with that? I mean, rents have been obviously returned to full paid now, Matt, but what are we sort of seeing out there in the market from that perspective? Has that all sort of come back?
Oh, it's certainly starting to come back, and we've certainly had a lot of people that paid their deferred rent in full straight away when they were able to. There's quite a lot of people still on payment plans, as far as I'm aware. But I think that people are getting back to normal and starting to trade good numbers again.
Yeah, which is I mean, it's a great economic indicator to see that the businesses are able to do that. But I guess from Steve, from your perspective, have you seen many challenges in that process where people haven't necessarily been able to come back, just at a general feel?
Oh, look, not really. I mean, I think probably a handful of businesses are still potentially struggling and potentially and not being able to pay back their deferrals and what have you. But in the scheme of things, it's really a very, very, very small percentage. So yeah, we're seeing businesses. I actually think businesses are doing quite well at the moment.
Yeah, and that's fantastic, right? Because it could have gone many different ways with all of the lockdowns that we've, I guess, endured here in Victoria. And Matt, have we seen many tenants that have had to need to downsize, or any areas where we might be seeing some movement, I guess, in terms of the footprint for tenants as well?
Yeah, look, I think it's one area that I think we probably expected we'd have an abundance of people shifting around, tenants falling over, handing back keys, saying that they're moving, from 100 square metres of retail down to 20 or working from home. And I think that's a market that really hasn't come forward and reacted the same way as everyone thought. And we've only had probably maybe Steve, one or two tenants that have come in and said, look, we just can't run anymore, or they've completely changed their setup in business. And I think that's a really good stat to have over all the portfolio that we manage. And the change has, in the way that people have had to adapt to the new conditions in retail, they've done that quite well. And I think we're also seeing a lot of community-based people in and around their main groups of shops really get behind their local people and help them through it.
Yeah, I think that's right. I think the issue you raised about adapting, that certainly happened over COVID, and they've carried that adaptation through into their normal business days and business lives. We've had the lockdown for the last 3 weeks or so, which, whilst it wasn't a hard lockdown, had an effect on our ability to show people property. But the level of inquiry certainly hasn't really changed. In fact, it's probably increased over the last 3 months, I'm sure.
Well, as you sort of said in our last market update, Steve, I mean, this really is uncharted territory for a lot of people. It's not an economic recession in its current, well, in its traditional sense. It's forced because people have shut down. But it's great to see, I guess, the positives that have come out of that, which is we're not seeing too much fluctuation in terms of people needing to shut down in bits and pieces. And like you said, Matt, a very small percentage of what is a large pool that's managed at Tsimos, of people that have really struggled and maybe not been able to get through. So even just as our general Australians, it's always exciting to see that our economy is bouncing back.
I think the rest of the world is baffled by how Melbourne's doing it and how we're able to keep going through this. And we've got people buying property and renting property, and we're still continuing to see strong demands.
Yeah, which is absolutely fantastic. So, look, I guess to jump into some of these asset classes, because I mean, there's obviously the 3 asset classes that we're exploring today, but retail, when we sort of spoke last time, was the one that we were all sort of a little worried about in terms of how that would recover in bits and pieces. But how are things faring, I guess, from a commercial property perspective in that retail space, from your perspective, Steve?
Look, from what I'm seeing, the retail market's starting to bounce back. I know that the boys have sold and leased a number of retail properties in the last 2 or 3 months, which has surprised me. But I think it's just testament to the fact that the businesses are strong and, bouncing out of COVID. The pent-up demand is there. I mean, I went out to a restaurant on Friday night and on Saturday night last week, and they were packed, within the COVID rules, of course. So, I think it's amazing how they've been resilient and how they're bouncing back beautifully.
And Matt, there's been some good results, I think, from your perspective over the past few weeks. What are some of the things you've seen out there from retail?
Look, I think the price point of retail has a bit to do with it, and the biggest sort of inquiry levels we're seeing are all coming from that under $30,000, under $40,000 renting price point. We're listing properties at that rate, and even as low as 12 and 14 grand, and we're getting lots of inquiry on those, and they're not taking very long to lease at all. I mean, happily enough, we in Parkdale just a few weeks ago, we listed 3 shops next to each other, and I said to the landlord, I said, I'm really not sure how long this is going to take, and they were sort of really open to having it sit there for 2 or 3 months until we found tenants. 3 weeks later, I've got 3 different tenants, all fully leased, started. Awesome. We had 30 plus inquiries on these properties and about 7 offers at the end of the day. And that sort of surprised everyone. But it comes back to that price point, and
let me add, if I may, that those particular retail properties weren't what I'd call prime retail positions.
No, either. They were tucked away in a side street.
Quite staggering how you lease them so quickly.
And, I think that people are really looking at their bottom lines. They're really looking at really how much retail space they need. Can they do majority online? How much stock they need to have? And really the fit out costs. So I think obviously smaller shops, smaller fit out costs, they're just doing basic painting, basic flooring, and using furnishings to change spaces rather than spending lots of money on fit out and getting creative. And I think that's the way that people are changing what they're doing.
And you had a good result, Matt, didn't you, at Main Street in Mordialloc?
We sold a property there, a bakery, and strata titled retail shop, and we had good inquiry on it. And I think we're sort of starting to see a little bit more retail come on, but the inquiry level is surprising.
Which is again encouraging, because when we were catching up, we were sort of a little worried about that space. What's going to happen in retail. I
think everyone thought there was going to be hundreds of listings being listed and retail available for sale everywhere. We just sort of haven't seen that.
Yeah, which is interesting to see it play out. It always sort of sails in the middle rather than the pendulum at either side. So and stock levels seem to be pretty good, Matt. Do you see any? Do you see any additional sort of uplift in leases available at the moment, or for sale?
I wouldn't say there's an additional amount of stock on the market. It's been a steady flow.
Yeah.
the levels are still quite low in terms of regular levels, but they're still consistently coming, but we're still consistently leasing them and selling them. So certainly in the retail market, there's probably a little more than we sort of have seen, but industrial side of things, there's very little stock still and a huge demand.
So let's jump into that next asset class. I mean, office. Now, I mean, a lot of businesses, as we sort of said in our last catch up, have adopted this, work from home. I think we're only at 25% at the moment in the current restrictions. Office capacity, is that correct?
No, I think it's 50 now.
50,
okay. Yeah, or 50. How is office performing? Obviously, we know there's CBD. That's a different sort of to your suburban office. How's that sort of faring at the moment?
Well, well, certainly Matt can vouch for some results we've had, but the spaces are starting to lease up. I mean, Matt leased one in Charman Road just recently. Was 300 or 400 square metres, Matt?
Yeah, we leased corner of Charman Road and Park Road, an office upstairs, large 300 sort of metre office. We've also leased a number of little 50 and 60 square metre offices as well in Bay Road and Sandringham and Cheltenham. So I think the push for a lot of people to come out of the big offices in the city, the St Kilda roads, the corporate areas, to come out to be closer to home.
Yeah,
big push, and everyone's pushing that, and everyone wants to be close to home.
And how was the rate? Was it how did the rate you achieved compare with pre-COVID rates?
Probably only 10, maybe 15% down. So not. I mean, I wouldn't say it's huge compared to what I was expecting and what I was expecting. But I mean, when you're talking $20,000 and you lease it for $18,000 or so, it's not a big deal.
And we're still leasing the little spaces, aren't we?
So yeah, it's been good, been surprising actually.
Yeah, it's just encouraging because it all leads to ultimately a positive economic outcome for businesses when people are leasing these things as well.
And so I think one of the messages that I'd like to send out to all our landlords and to all landlords, quite frankly, is just to stand your ground. I mean, I don't think the market's collapsing or has collapsed. It's strengthening, it's firming up. So stand your ground. I mean, if you've got to give a little bit of pain away to secure a tenant, maybe some rent-free, maybe a reduced rent for year one, well, we can live with that. But, over the medium to long term, it's not going to be an issue at all. And I think, as I say, everything seems to be firming up. Prices are firming, yields are firming, and plenty of investors. Investment property is very, very hard to come by, good quality investment property. So, look, I think it's a pretty good market, and I think it's going to continue.
I think the investor market, we're starting to see they're coming back into the market a little bit. It's been a little overrun by the owner-occupiers of the world and chasing to buy property rather than rent because of all the low interest rates. But I think we're starting to see the investors coming again, and that's a good sign.
It would be interesting to I guess, understand if there were some insights around the different tenants and bits and pieces that are renting these spaces, whether they're startup or existing business. That's probably not a conversation for today, but I'm always just intrigued in that space when people are looking at options like co-working and those sorts of things as well. But that too comes at a price, so it's interesting to see the suburban office spaces taking off as well. So look, I guess the next one, which has always been the big topic for us around industrial. I mean, I don't imagine there's been too much change since March. But Matt, what's the read on industrial? How are the stock levels at the moment?
Still low, and still very hard to come by as an agent trying to list. We're sort of, when we get them, we get an abundance of inquiry, and they're sold or they're leased quite quickly, especially in those lower levels. The leasing 100 to 600. There's virtually nothing around, and the smaller sales of $1 million, $1.5 million, and under, there's very limited stock still. So I think it's only going to strengthen again and get more and more demand as the year goes on.
And have we seen any interesting results or any leases or sales in the past few months, Matt, that are noteworthy?
Oh, I think the industrial sales, I think everyone's seen around there, they're getting ridiculous prices at the moment, and people are still pushing them, still in and around the Huntingdales, the Oakleys. They're still pushing well above averages, and it's getting to a point, a bit like the residential agents, where you're trying to keep up and provide a figure of what it will sell to a vendor, and then it outperforms you again. And as an agent, that is getting tricky to keep up with and tell people on paper what it should be and what it actually is achieving. So it's good. It's very promising, and as I said, it's an exciting market to be a part of.
Yeah. And I think as developers start to new developments and start to produce more stock, there'll be a lot more activity, and that's starting to happen now. Matt's just picked up a development down in Mordialloc, some 30 odd industrial units, and the inquiry on that's been very strong.
Yeah, well, it is interesting, right? Because if the stock levels are low, then that does encourage developers to enter in. We know that money is, or interest rates are quite low, rather than calling money cheap, but interest rates are quite low at the moment. That should drive some new developments, which is exciting.
And from what I'm hearing around it, I don't think that a rise in interest, not that we want a rise in interest rates right now, but I think if it rose a little bit, quarter or a half of a whole percent, I really don't think it's going to change our market at the moment. I think we're going to continue to go strong.
I think so. And if interest rates do go up, say in the next 12, 18 months, 2 years, it's only an indication that the economy's strong.
Yeah.
And that's not going to really affect the bottom line from a developer's perspective, in all honesty. So, I think that's exactly where we sit.
Awesome. Well, look, guys, just to wrap up there, thanks for that quick update there. Any favourite opportunities, I guess, you see out there at the moment, Steve? There's a few
opportunities. No, not really. But what I'd like to say is that because there's such a shortage of investment stock available, and we've been sort of discussing with a number of our clients, our landlords and our investors, properties that are on the market that we're not necessarily selling, but we're happy to provide advice and even negotiate on the investor's behalf or the landlord's behalf on properties that they may be interested in buying. And we certainly keeping our eye open on what's available in the marketplace, and if there's anything that's good, and I know that many of our clients are looking to buy investments, then we'll do an analysis of it, a feasibility study, a rate of return study, and then we can, as I say, negotiate on the landlord's behalf.
Yeah, awesome. And Matt, I guess your favourite opportunity, I know those 30 warehouses that are there are always an interesting one, but what's your favourite op out there at the moment?
Oh, look, I still think if you can secure a reasonably priced warehouse, the smaller ones, where they're going to see good growth, good value in the future. And I'm always a big believer of buying a property that is of multiple uses, something that you can lease, you can divide into tenancies and redevelop something later on. It always provides you with multiple opportunities and strong ways of doing things in different markets. So I just, that's my opinion anyway.
Yeah, having a look through and just having a look at how things can be used, but it is interesting, some of the opportunities that are out there. So look, I guess for us guys, that was our quick update. Again, certainly reach out if there's any questions, as Steve mentioned as well. If you are looking to understand what the potential opportunities are for your portfolio, certainly reach out to the team as well. And if you have any feedback, send it through. But thank you so much, guys, for taking us through the update.
And keep smiling.
Cheers, guys.
Okay, take care.